I think that the ETFs have huge tailwinds, maybe primarily from the growth of the options ecosystem around it. I think that it'll take maybe 3 years to 5 years to really get deep traction in, kind of the sales and distribution of perpetual preferreds. And that at the same time, the ETFs will also continue to grow. And so I don't know that in the short term that digital credit will catch up to the Bitcoin ETFs. In the medium term, yes, I think that they will. And that it's great to see these products compete against each other in that regard. But they're also just not competing against each other. They're completely different verticals.
Before we begin, let's make something clear. All views expressed in this podcast by me or my guest are purely our personal opinions. Nothing we say should be treated as a recommendation or an inducement to make any specific investment or to follow any particular strategy. This podcast is for informational and educational purposes only. It does not constitute financial, investment, legal, or tax advice. Before making financial decisions, you should do your own research and consult with a qualified professional advisor. Welcome to a new episode of the Digital Credit Frontier. Today, we have our guest. He is the author of the speculative attack that he wrote in 2014. He was the captain of Lightning at Kraken. He was the advocate for proof of reserves. He was the measurer of CO2 at Riot. He founded the Bitcoin Bond Company in 2025. He now is the host Bitcoin for Corporation show. He's a board member at Strive. Welcome, Pierre Rochard.
Hey, thanks for having me on.
So great to have you on, and I'm really looking forward to this conversation to dive in this topic. Before we dive in, the state of Texas bought Bitcoin recently. You took a role in the process. Can you tell the audience and me about what the goal is for the state of Texas and what your role was in this process?
Yeah, absolutely. So, when we look back at the history of Bitcoin for Texas, it had kind of a mixed picture. On one hand, the governor, Greg Abbott, when he ran for governor in 2014, he was accepting Bitcoin donations for his political campaign. So that's one. Two, a few years ago, the Texas legislature, or certain senators within it, really wanted to clamp down on Bitcoin mining because lots of Bitcoin mining had come after China banned Bitcoin mining. And it was coming onto the Texas grid, causing some concerns, which really kicked off a lot of public policy work to educate the Texas legislature about Bitcoin. Some of them already were very familiar with Bitcoin and were, proponents of it or trading it. And so others were just skeptical or didn't know enough about it to have an opinion. But because of all the Bitcoin mining going on, they got to familiarize themselves with the value of Bitcoin. Because ultimately, with Bitcoin mining, if you think Bitcoin has zero value to society, it's really hard to justify any energy usage at all, right? Or any time spent on it or any economic investment in it. So once it clicked for them that this was a independent alternative monetary system from the dollar and from gold, I think that there was a lot of momentum to develop a strategic Bitcoin reserve that also was, I think, accelerated by now President Trump endorsing the idea at the federal level in July of last year. So Texas legislators put forth a bill. They held a hearing for it. I had the honor of testifying at that hearing to kind of explain why I think it's a great idea to do this. In the past, I had written a piece about at the federal level that there should be a bill like this that would stop the U.S. Marshals from auctioning off Bitcoin that they seize. And the rationale is really twofold. One is that if somebody gets their Bitcoin taken from them by the government because they're accused of a crime, I don't think the government should sell that Bitcoin immediately, because what if that person turns out to be found innocent? And then they get the dollars back, I guess, from, the sale of Bitcoin, or
Yeah.
the government has to go out and buy back the Bitcoin or something like that. So first of all, the Bitcoin should not just be sold like that. And two, that it actually, if they really are a criminal, the best use of that asset from a public policy perspective is to hold it in a reserve, because it's going to go up in value. There were past auctions of Bitcoin that happened in the United States where, they missed out on billions of dollars worth of value because they sold too early, and they should have held on to it. So at the state level, what the Texas legislators appropriated from the budget was $10 million as kind of the first step towards building up a Texas reserve. It's to my knowledge, they have deployed all $10 million. And so, I imagine that in the next legislative cycle, they'll push for increasing that allocation.
Yeah, I mean that's awesome because I'm from Europe and I'm from the Netherlands. Maybe you can tell, but like we all know that Germany sold their Bitcoin a bit too early. So I'm a bit jealous on the Americans with the path you're heading right now. I think that's especially on the Bitcoin front, it's the right path in my opinion. But what I really like about what the state of Texas said, it was also that they said we're starting out with, I think they bought IBIT, but they put self custody on their roadmap. So really, and that's like the holy trinity in Bitcoin. Like you've got the mining, you run your own nodes, and you hold your own keys. I mean that's sovereignty right there.
Yeah, I agree. And it's going to be a process, right? They're going to have to figure out how they're going to self-custody the Bitcoin, but they accomplished that for gold. So there's a Texas bullion depository where the state of Texas actually self-custodies its own gold. And so I'm confident that they'll be able to accomplish that for Bitcoin as well. And, I think that Texas is in a really interesting position because the state economically is doing very well. And so we have a budget surplus. We don't have a budget deficit. I think that if you look at other governments, they have big deficits. And the other part of it, too, is that we don't have our own currency, right? So if the Biden administration prints trillions of dollars and debases the dollar, Texas can't really do anything against that, other than accumulating hard assets like Bitcoin. And so that's what they're going to do.
Yeah, it's really like baked into your culture there in the Texas culture. So one thing I saw about, so I've been following you for I don't know how long. I think I'm on Twitter since like 2016 or 17, and I'm following you
OG.
like for years on. And something I really appreciate about you is you're always keeping your calm on Twitter, and you're always answering just like on topic. And I was wondering, like, how do you manage that? And does that come from your belief, your Christianity, or is it just the person? Or yeah, I really appreciate you doing that.
I certainly don't get as angry now as I used to. So I think that an active prayer life is key there. I'm not perfect by any means, so I still, have lots of sins to confess at the end of the day. But it's also the intellectual argument, right? Where I think that a lot of Twitter discourse is, people trying to rationalize their decisions. And so what I found over the past decade or so, unfortunately, there's a lot of cases where somebody, got leveraged on Bitcoin, got wiped out, and now they've made their whole personality around being a Bitcoin skeptic, which to me, it's just, it's not intellectually honest, right? It's very sad that it's become a thing for them. But the other part of it too, I think, is that there's not this education in public schools, or really even in private schools for that matter. Quite often, they don't talk about monetary economics in a way where it would actually help you understand Bitcoin. They only talk about it in a way that helps you understand fiat currencies, which is important, but it kind of shapes people's beliefs that, oh, Bitcoin's just beanie babies, it's just speculative. So, that that's where you gotta actually to take the time to educate people because they haven't been educated. It's not their fault that they don't know all about Austrian economics.
Yeah. So a lot of keyboard warriors giving you a hard time, but I just want to thank you for your service that you did for the Bitcoin community. So thank you.
Yeah, it's been a lot of fun.
All right. So could you give me and the audience a brief summary of the article that you wrote in 2014, the speculative attack? And I think, was that with Alan Farrington, or was that the 2.0 that you wrote like recently? But can you give us a summary that what you're talking about, and could you tell us if this is happening right now?
Yeah. So I wrote the first one on my own. The second one was primarily Alan doing the heavy lifting on that. So very grateful to him for his kind of intellectual interest in that topic. And he's done great writing on his own as well. So I highly recommend people to go and check out what he's written. The first question I wanted to answer with regards to Bitcoin's future adoption, so it's very much a kind of a predictive piece, was what is causing Bitcoin adoption, first of all, that was summer of 2014. And where was this going? What's the end game for Bitcoin? At the time, and still to this day, I think that there's maybe three different schools of thought. One is that the adoption is really about payments. And so it comes down to Visa and MasterCard and charging lower fees than 3%. And that's how we'll get mass adoption. So this is the Roger Ver school of thought. I don't think it's entirely wrong, right? Like, obviously, it has to have some truth to it to have any traction at all. And I worked at BitPay, which is a Bitcoin payment processing company. I worked in Lightning, where we talked a lot about payments. So it's not like I reject that as just entirely false. But it's not the primary driver of Bitcoin adoption. The second is about kind of broadly what I would categorize as the utility thesis of Ethereum, right? Where we need to have like smart contracts. We need to be able to do things with Bitcoin that we can't do with other monetary technologies, right? With proprietary technologies. And so, people thinking about discrete log contracts or building decentralized exchanges, all of the kind of even NFTs, right? All of these ideas around how to have non-monetary utility, right? They don't like that it's money. Some of them even are like, oh, we need to change the name. It shouldn't be called Bitcoin. It should be called, decentralized database. And very adjacent to that, it's interesting. Now I would say that there's kind of within that, the self-sovereignty argument, which again is not entirely wrong. I think self-sovereignty is important, and actually a lot of the other aspects of Bitcoin adoption are downstream of that. But just this idea that at the extreme, everybody should run a Bitcoin node, otherwise Bitcoin has failed. That everybody should hold their own keys, otherwise Bitcoin has failed. Everybody should be Bitcoin mining, otherwise it's failed, right? So it's kind of this, maximum decentralization that spills. It kind of, what it does is it ignores the economics, right? It says, no, this isn't the case for economic reasons, right? It's not because you expect that your custodian is going to lose your Bitcoin that you're going to hold your own Bitcoin. It's because of the principle of it. All right. So it's on ideological grounds that you should hold your own Bitcoin, not on expected value grounds. And so, again, totally fine for people to have that view. I don't think that's what's going to drive mainstream adoption. I think that it's great for the people who want that, individualistic kind of libertarian ethos. I'm certainly a part of that group. But I also recognize that when I go talk to normal people, we're not normal. So, And also that if people are using BlackRock's IBIT ETF, you can cope and seethe on social media, right? You can whine about it, you can cry about it, you can, I don't know, launch awareness campaigns like, hey, are you aware that you can self custody? And so, obviously you shouldn't use IBIT. But at the end of the day, I think IBIT is may have hundreds of billions, if not trillions of dollars of value in it. And I'm more interested in understanding why people want to use IBIT than, trying to convince them to not use it, because obviously it's a product that is working for them. Then finally, what the piece is about is this concept of a speculative attack. And this is where I think that basically if we map it out and we start with, okay, Bitcoin is permissionless technology. Anyone can run a Bitcoin node. Anyone can hold their keys. Anyone can mine, which is different than everybody should, right? Those are two different statements, right? Anyone can versus everyone should. But if we start with the fact that Bitcoin is decentralized inherently, and thus nobody can change its monetary policy and debase the currency and inflate beyond 21 million, then we get to the second point, which is number go up technology, where you have adoption of Bitcoin happening against a fixed supply. So demand is increasing, so the price is increasing, the purchasing power of Bitcoin is increasing, and that actually attracts a lot of people who they don't care at all about the underlying technology, right? They don't know what open source is. It's just completely irrelevant to them. They are purely interested in being better off economically, right? Which should not. It's kind of weird, like within the Bitcoin community, that's seen as like, they're just like tourists, right? Or they don't understand the ethos, because all they're doing is trying to improve their lot in life instead of embarking on an ideological quest. But in any case, that demographic, I think, is crucial for Bitcoin's social scalability. I think that's actually maybe the only thing about Bitcoin that scales socially is people's self-interest and wanting to see the value of Bitcoin increase. And that the decentralization really serves as a guardrail for that. So for example, when people say, oh, we could increase Bitcoin's value, Bitcoin's price could go up if we increase the block size limit, right? So that, I've heard people make that argument. And Bitcoin's decentralization is a guardrail against that kind of nonsense, where people would actually sacrifice Bitcoin's properties to achieve NGU. Then after we have NGU technology as kind of the secondary layer, the third layer on top of that is the financial engineering. And so this, I think, is actually what will cause Bitcoin to ultimately succeed over other currencies. Let's keep in mind the massive challenge of the network effects of currencies. It's very hard to displace. And that's actually why, if you look at the history of the dollar, when they went off the gold standard, they didn't announce, oh, we're going to have we're not going to have dollar gold and then dollar fiat, right? They didn't do a clean, like, hard fork and say, hey, we're going to launch a fiat currency. No, they have to ride the momentum of the network effects of the US dollar and hijack it and to be able to steal the brand and to steal people's savings, for that matter. So how do you overcome those network effects? It has to be by the increase in purchasing power and then applying leverage to that, right? So I don't think that it would be enough to say, okay, we're going to have, or maybe, it would be enough to have marginal, like, adoption gradually over time. It would just take centuries. We've got to cypherpunk every single individual and win them over.
Yeah,
So
we as Bitcoiners, we should have a lot of kids.
yeah, exactly. That would be the plan. The judo move is to use the fiat system against itself. And that is to borrow fiat currencies and then put that value into Bitcoin and then have a reflexive feedback loop, which is the speculative attack. And this has been described in other contexts. So it was popularized by none other than Paul Krugman. as this mechanism by which speculators are able to hold monetary authorities accountable in the international forex markets. And so hedge funds like George Soros famously did this with the Bank of England. Interestingly, Treasury Secretary Besant was his agent in London, kind of precipitating this speculative attack, where they borrow the weak currency, they sell it to buy the strong currency, essentially shorting the weak currency, and then they pay off the loan after the value of the strong currency has increased. So that's a speculative attack. The exact same concept applies to Bitcoin. So that's why I wrote that piece to explain, okay, here's why Bitcoin adoption is happening. It's because its value is increasing, and that going forward, we'll see these speculative attacks. Now, I would argue that several have happened already. They failed. So they happened not using intelligent leverage. They happened using very unintelligent leverage, which is essentially margin trading on crypto exchanges. And, that works until it doesn't because of the reflexivity of the collateral, the mark-to-market, the liquidations. And so what we've seen is that while Bitcoin will have these wonderful bull markets, they undo themselves due to the amount of leverage that is going into the margin trading. What I think is evolving is how to have leverage that is not subject to kind of these pro-cyclical forces of liquidation. And so that's what I think is evolving right now. We're not there 100%, right? So I think that if you look at leverage in the form of options trading, futures trading, margin, all of these liquidationist forms of leverage, I think are still far greater than the amplification forms that are, in the form of the perpetual preferreds. But it will be, hopefully the next phase, right, will be to have a form of amplification that is not subject to big drawdowns causing liquidations. And so I think that we're kind of at an inflection point. I think that what we needed to get here was the growth of the Bitcoin market, just, into a trillion plus asset. And then, of course, the regulatory friendliness of the Trump administration here.
Yeah. So, while we're talking about this subject, about a speculative attack and about the industry like evolving to their strategy, started to issue perpetual preferred equity. Today we're seeing Stretch trade at $100 again, I think at 50 million volume. So maybe they're running their ATM program again and hopefully buying Bitcoin. We'll hear next week. So because the preferreds are now trading at Robinhood, I think at Kraken, at Xtalks, at Cash App, I read today. And Saylor is also talking about like the biggest idea, this idea that he's spreading recently, that you can build finance basically on top of, you have Bitcoin as capital, then equity, that's Bitcoin treasury companies who are issuing the fixed income instruments or the credit instruments. And, banks can buy those instruments and maybe give a part of that yield to the people and like minimize the volatility maybe to zero. So we saw also yesterday a project called Buck, the Bitcoin dollar, that those are promising 7% yield, and they are trying to, or they're gonna buy Stretch to basically pay for that 7% yield. Like, is this really the speculative attack, or is this more like a capital allocation? And for a speculative attack, you really need to borrow or like create more units of that weak currency?
Yeah, so great question. In a classic speculative attack, the idea is that the value of the strong currency is going to increase more quickly than the cost of borrowing the weak currency. And so when we look at how they're going about borrowing the weak currency, I think it's instructive to think about how do monetary authorities defend against the speculative attack. There's really three ways. One, they raise domestic interest rates. The Fed has signaled that they're going to actually lower interest rates. Two, they impose capital controls so that the banking system cannot lend out against that asset. And I think, that's what Operation Choke Point 2.0 was about, it kind of preventing those capital flows. But I actually think that there's a bigger thing here, which is that after the financial crisis in 2008, they passed this Dodd-Frank bill that really reduced the amount of lending that can come out of the commercial banking system here in the U.S. And that, I think, created this opportunity for other lenders to step in and to be able to do that. So there's not, I think there needs to be more commercial bank activity around Bitcoin where they really are creating new dollars through the fractional reserve banking system. But that is obviously heavily regulated. It's actually arguably the most regulated part of finance. And so the way that Saylor's going about this, and others as well in the treasury industry, is to route around that regulated component and to offer directly to the public, right? So I think that when we look at the history of Bitcoin, that's kind of been the pattern, is that the retail audience gets it first, and then the institutional money really comes in later. And so I think that'll continue. Now, whether any particular, experiment or business strategy works, it's going to be for the market to decide, right? Because ultimately the perpetual preferreds, they're competing against other financial instruments, right? So it's not like they are the only fixed income product that exists. From our perspective, we see them as being far less risky than any of the other fixed income products. But for an investor who's not familiar with Bitcoin, they might see it as more risky than other products. And so I think that there's going to be education, but there's also going to be track record of, okay, this has been around for 5 years. That increases our confidence in it continuing to exist. And then you'll start seeing forms of arbitrage, right? Where people who do have access to the commercial banking system would borrow at 5% and then go invest at 10%, right? So I definitely think that we'll see that kind of financial intermediation and that arbitrage happen, but this takes years. It doesn't take, months or days.
Yeah, this is the part that I love about Bitcoin, because Jordy Visser was talking about Bitcoin's IPO moment, and I wrote like a few days before. It was coincidence, but I was replying on James Check because a lot of long-term holders were selling, and I said that, like, this is the first time in history that like retail is dumping on the institutions, and with those perpetual preferred equities instruments, this is the second time that retail can do like what you're talking about, like interest rate arbitrage that we couldn't do before. We can be earlier than the banks and the hedge funds. So I love it. I love that the opportunity is there. It's not a recommendation to do so, but yeah. How unique is it that you have money, or you park your wealth like these instruments that are over collateralized, instead of parking your money at a bank that is a fractional reserve? Because I think Caitlin Long is trying to build this Custodia, a bank that is fully reserved. But like, if you would to park your money with a bank that would be backed by these instruments, which have a BTC rating of 5, basically they're over collateralized, and normally that wouldn't be possible because you cannot pay a yield if you're fully reserved. But now we can, because it's powered by Bitcoin. But is this sustainable? So first of, how unique is it? And second, like, is this sustainable over the long time?
Yeah, great question. So it's I would argue that it is pretty unique in the sense that normally the collateral is good collateral because it generates a cash flow. And so you have an expectation that, for example, a mortgage on a residential property, it's really driven by the fact that that person's basically paying rent, right? So the cash flow is coming from the fact that the owner of the house has a job and is using, the income from the job to pay the mortgage interest. And that with Bitcoin, that doesn't exist. And so what is unique here is that it's really coming out of the capital gains of Bitcoin. So saying, okay, over the long term, Bitcoin's capital gains are going to be greater than the dividend rate on these perpetual preferreds. And that's what makes it sustainable. That is, I think, very unique and very challenging for people who, they see capital gains as being far more speculative than cash flows. I think that's just a cognitive bias. And I don't think that's based on actual data or kind of first principles thinking. And that really, if you look at it full cycle and you say, okay, well, you're lending dollars to strategy, and then strategy is going out and buying Bitcoin. Strategy is, and I'll put, big air quotes around this. They're lending the dollars to whoever is selling the Bitcoin to them, right? They're giving the dollars, they're trading the dollars. And in a way, what strategy is saying is that maybe not this particular person that's selling their Bitcoin, but some person is going to want to buy Bitcoin at a higher price in the future. And that is the future cash flow. And so I think that that's really hard for, traditional finance people to get beyond, okay, this is like greater fool theory, to actually it's lesser fool theory, because whoever sold their Bitcoin, they're the fool. And whoever's buying the Bitcoin is the wise person here. And that's, I think, it's going to take many years for them to figure it out. That's what creates the opportunity, obviously, for everyone else. But, in terms of the attractiveness of these products for retail, I think that it's all about what is your time horizon. So if you have a time horizon that's greater than 5 years, I think that holding Bitcoin makes a lot of sense. If your time horizon is less than 5 years, then you've really got to think about, okay, well, what has less volatility than Bitcoin? Because you're going to need those dollars within the next 5 years, right? And so that's where I think that the preferreds make sense. And then from a finance perspective at the institutional level, it actually might also make sense if, for example, you have investors where they're bullish on Bitcoin, some of them, but others are not. And you have to get a committee to come together and agree to buy Bitcoin. That might not be possible, but it might be possible to get them to come together to buy a perpetual preferred, because it's far less risky from a Bitcoin price perspective and volatility perspective than Bitcoin outright. And so they can actually have indirect Bitcoin exposure through these preferreds. And I think that there'll be a market for that.
Yeah, for sure. I want to talk about terminology with you, because I think you're one of the few who are really, like, has the capacity to have an opinion, or have an educated opinion about this. Like, Saylor is talking about digital credit, but there are also critics saying, like, it's not really credit. Like, what is the definition of credit? And, like, do you think it's a fair term that he's using, or could you even say it's misleading?
Yeah, I mean, I think that it is a fair term for it. I think that from a legal perspective, there's the convertible notes that have equity and, fixed income properties to them. They're a hybrid instrument. and the perpetual preferreds are equity instruments. But that's kind of just for a legalistic analysis. If you look at it from an economic perspective, I don't really see an argument for why they're not credit. I don't know if you want to kind of elaborate on what people's arguments are for that.
Yeah, basically because it's not that they're saying that like if the principal is getting repaid, then it's debt, and if the principal is not getting repaid, then it's not debt, and so it couldn't be credit, and yeah, it's not. And this
Yeah.
is basically another critic, but it's also they're saying like you have to trust the board now too much because they can still issue a senior debt above the preferreds, and that shows that it's not credit.
Yeah. So on the first point, I think that usually credit does have a maturity date, but there are credit instruments out there that don't have a maturity date. And when you think about credit in terms of duration, they all have duration. And so I think that what distinguishes credit from equity um, is really about who is first loss. And so if the equity holders are first loss, I don't really see a strong argument for, why that somebody sandwiched in the middle would not be credit. Like there's mezzanine credit out there that does have senior credit to it, and so it's subordinated. I think that there's, unfortunately, because the Bitcoin treasury companies as a whole violate so many core ideological rules within Bitcoin, that then it has kind of spun up a cottage industry of folks trying to, essentially counter signal or naysay any kind of thing like terminology like digital credit, which I don't see it as being particularly controversial. The same thing with like, oh, is it a claim on the Bitcoin itself, right? But people talk about Bitcoin per share. They get
Yeah.
upset about, it's not a claim on the Bitcoin itself, which is true for an airline company, right? So if you thought about, airplanes per share for, Southwest Airlines, yeah, you don't have a claim on a specific airplane, but everybody understands what you're talking about, which is that there's a whole company here that's executing on a strategy to create value for shareholders. So I think that, yeah, that this is an area where you basically have to have a dual interest in Bitcoin as a monetary system and in corporate finance as it exists in the real world. And that if somebody just wants to look at Bitcoin as a monetary system and sees all of corporate finance as a scam, they're not going to have very useful definitions for what's going on in the Bitcoin treasury space. They're just going to really kind of have knee-jerk reactions to everything that, and find ways to kind of talk it down.
Yeah, it's like the Venn diagram that presentation was talking about. That to understand or to dive in this topic, you need to understand Bitcoin, you need to understand equity markets, you need to understand the credit market and security analysis, and then you can come up with an opinion. But I also see like some people I really respect, they're still having this knee jerk reaction what you're talking about. But because the other thing that they're saying is like, they say there's a lack of maintenance covenant in the prospectus of the preferred, and they would like to see more like to uphold certain financial standards or restriction on debt or maximum amplification to really create a stronger case for the perpetual preferred to become at the top of the capital stack.
I mean, I think that's strategy's plan is that they're going to retire the convertible notes and that STRF will be at the top of the capital stack. They need to make the economically rational decision. And so I think that there will continue to be a negotiation process between the common stock and the preferreds. because they have divergent interests in the sense that they're each trying to capture the value, right? Ideally, the perpetual preferreds would, have all the rights and they'd get paid 20%. And, so yeah, everybody wants to have a pony and to have, unicorns and rainbows, but it's a negotiation process. And so I think that as more Bitcoin treasury companies come out, they'll be able to differentiate themselves and say, hey, we do this differently or that differently. But yeah, it's going to be a competitive market. Yeah.
Yeah, I mean, this is what you're explaining is really the dichotomy between like the common equity and the preferred equity. Basically, what's good for the common equity is bad for the preferred equity. Not on all fronts, but yeah. So I think this is a great segue into a few things that I wanted to talk with you about, like the Bitcoin ethos. You were talking about that Bitcoin treasury companies can differentiate like between each other, and like how could I do that? And because I have a self-custody background, I worked 3 years in the self-custody industry, and like I would like to see like companies to hold their own keys, and I'm wondering like what the spread will be on like different perpetual preferred equities for businesses who do that against versus businesses who don't do that, but also can they differentiate between like holding Bitcoin, maybe in the future, quantum resistant addresses, and maybe proof of reserves, something you were a big advocate for. I would like to hear your opinion about on which, how they can differentiate and what will be most likely.
Yeah, I don't think that they'll differentiate on the self-custody question. I think that when you think about like what is needed to build up a secure custody function, that's one thing. But the other part of it is have the segregation of duties between different entities. So I think that for the security of the Bitcoin, and for the best outcome for the shareholders, you probably don't want management to have the keys directly. So you want to have different layers to this. You want to have a third-party custodian. You want to have a third-party auditor. You want to have internal audit, internal controls. And that I don't think is really, maybe somebody will come out with like a really amazing product one day that accomplishes that for self-custody. But I think that it might be just from first principles, not the best way for an organization to hold Bitcoin, and that they need to have a third party. And, with a family, you start to get into more of a gray area where self-custody starts to make more sense, perhaps. But even when you look at like inheritance planning, it's, it starts to look like, well, maybe you want to have some kind of third party involvement. And then for individuals, if you don't care about anybody inheriting your Bitcoin and, you're in your 20s and you understand computers, then self-custody makes a lot of sense because it's something you can wrap your head around. The way that Bitcoin treasury companies are going to differentiate themselves is by access to capital, right? So the ones that are best able to access capital are the ones that are going to do the best. That's the core functionality of a Bitcoin treasury company, is that they are financing themselves and financing their ability to acquire Bitcoin. And I don't think anything else matters. I don't think that the operating company matters. So, if they're able to generate free cash flow from the operating company, that might be good, that might be bad, right? So it might be good because they're able to, put the proceeds into Bitcoin. It might be bad because they don't have access to, return of capital, tax treatment for the preferreds. So there, I think that's the differentiation is about what relationships do they have, or what marketing are they able to put together to be able to attract more investors across their capital stack, right? Whether it's convertible notes or perpetual preferreds or the common stock.
All right. Thank you. So we're all already heading to almost 1 hour. So I want to ask you about the Bitcoin bond company, and I want you to reflect on last year, and if like was digital credit or these preferred perpetual equity, was it on your bingo card when you started the company? And do you now like do you did your own vision changed over time for the future of like Bitcoin bonds?
Yeah, so the vision for Bitcoin bonds really dates back to summer of 2014 when I was mapping it out in Excel. And I did not know that MicroStrategy would acquire Bitcoin, 6 years later. I didn't know that the SEC would actually not approve any ETFs until 2024. I did know that, the Winklevi twins ETF did not get approval back then. So already the SEC was pretty conservative or overly cautious about Bitcoin. Now, the going forward, I think that there's going to be a lot of different formats that Bitcoin's going to find itself in. So 2024 was about the ETFs, right? Getting Bitcoin into a pure equity format. It was also about the convertible notes. So getting Bitcoin into the convertible market. And I think actually, even after a strategy moves away from using convertible notes, I actually think that there's going to be other treasury companies that lean into it, that they differentiate themselves by not having perpetual preferreds and only having convertible notes. And that's kind of the target of capital markets that they want to go for. 2025, the launch of perpetual preferreds is significant. Now, going forward, I think that what I want to accomplish, the Bitcoin Bond Company, is really having notes that are purely backed by Bitcoin, that are secured by Bitcoin and not corporate credit. And so really kind of isolating the credit risk purely to Bitcoin's purchasing power, which hasn't really been done yet. And that's kind of what I want to accomplish. Lots of behind the scenes work to, make that a reality. But that's the vision for it.
All right. So, and what is the roadmap for this business, for this project?
Yeah, so, the first step is really engaging with the rating agencies. And so that's the current step that we're at. It's been very productive. And so we're going to continue to develop that. At the end of the day, they want to be data driven. And that's, step number one. So that's what I'll continue to pursue into 2026.
All right. So last question for you. I talked to Tycho Onnas. She's the head of Bitcoin strategy at Treasury BV in the Netherlands. He called like the digital credit or the perpetual preferred equity a Bitcoin second ETF moment. Do you agree with that statement? Do you think will be smaller than like the Bitcoin ETF or maybe even bigger?
I don't think that it will be bigger in the short term. I think that the ETFs have huge tailwinds, maybe primarily from the growth of the options ecosystem around it. I think that it'll take maybe 3 years to 5 years to really get deep traction in kind of the sales and distribution of perpetual preferreds, and that at the same time the ETFs will also continue to grow. And so I don't know that in the short term that digital credit will catch up to the Bitcoin ETFs. In the medium term, yes, I think that they will, and that it's great to see these products compete against each other in that regard. But they're also just not competing against each other. They're completely different verticals.
Yeah, but they're both buying Bitcoin with it. So that's great. So Pierre, I want to thank you for your time. I really appreciate you coming on. I learned a ton from you. Where can people find you on the internet?
Yeah, follow me on X, Bitcoin Pierre.
All right. Thank you. Thank you, Pierre.
Thank you. Thanks for having me on.